Hello traders, my name is Tomasz Wiśniewski, I'm a Chief Analyst in Alpari Research and Analysis, and this is Daily Analytical Report with Alpari. We had an important event yesterday, which was FOMC minutes, but they failed to increase the volatility, at least on the forex market. Well, we do have a sideways trend on euro-dollar, for example. But we had movements on stocks. We also had data from oil inventories, which were expected to drop but went up. This caused a bearish reaction on oil, which was quickly stopped, and now oil is advancing higher. I will show you the calendar because it's not the only thing that had influence on the market. As you can see, here is crude oil stocks change. It was expected that we'll see a drop, but we saw a build here. FOMC minutes. FOMC, well, the consensus now is around 2 or 3 interest rate rises in this year. Also, we had a speech from Mario Draghi, and after that, we had a speech from Mr. Weidman, and this caused a small roller coaster on the euro. Because euro declined sharply, sharply, but not that wasn't a huge movement. But after that, rebound after Mr. Jens Weidman was talking. So ECB President Mario Draghi warned today that it was too early to reduce the bank's massive monetary stimulus, despite signs of strength in the Eurozone economy. And he pushed back against suggestions that ECB might rise interest rates soon. Right? So this caused a drop on euro-dollar. But after that, that comment was quickly diffused by comments from Mr. Jens Weidman from the Bundesbank, who said that giving the prospects of a continuous robust economic recovery in the euro area and increase in the price pressure, the discussion on when the governing council should consider monetary policy normalization and how it could adjust its communication accordingly in advance is legitimate. Right? That's what he said. He also added that there is an agreement within the governing council that an expansive monetary policy stance is currently appropriate. Yet one can be of different opinions about the correct degree of monetary policy expansion. I could have imagined a less expansive monetary policy, especially as many economic indicators are developing positively. I will show you on the chart how the reaction was. This is Mario Draghi, this is Mr. Weidman. So that's the situation on euro-dollar. So more or less we are on the same levels as we were before. Let's come back to the calendar. I will show you only those most important news. Alright, so Thursday we are just having today Trump and Xi Jinping meeting. That will be the most important event today. We should get talks about North Korea, but maybe about trade balance, trade deficit and trade as overall between China and rest of the world, and between America and rest of the world. We can expect maybe some opinions about dollar being too strong, or yuan being too weak. We'll see. But that is labeled as the most important event today, and most definitely it will. But we are waiting for non-farm payrolls because FOMC minutes failed to trigger any significant movements on the forex market. So that would be it from the fundamental point of view. So now we can focus on charts. As always, I will show you first the instruments that I analyzed on the trading sniper. So first is Euro-dollar, the most popular instrument on the market, and you can see that average daily trading volume on this market, not volume but daily change, average daily change recently is less than 50 pips, and that's for the whole week. So we are exactly on the same place as we were at on Monday. Typical side trend, waiting for a breakout. I don't think that a breakout of those lows, of weekly highs or lows, will be significant. I think that only breakout of this horizontal resistance and this horizontal support can be significant. So even if the price will make a lower low or a higher high, this won't change the sentiment here. Only breaking this horizontal resistance and a support. And currently, well, some guys can have a clear view on this, but for me, the price being exactly in the middle between horizontal support and a resistance is just a typical non-trading game, right? Here, I would be waiting for a breakout. That's for me, that's not a good occasion to buy. For me, it's a good occasion for a future breakout, and I'm waiting for a breakout here. I will be watching carefully what's going to happen during non-farm payrolls, because a breakout here can trigger a midterm buy or sell signal, and I think it would be nice to jump in on to the market. Next instrument is gold. Gold was having a rough Wednesday. Why is that? Because we are trying to break this horizontal, this dynamic resistance for the third time, first, second, third, and the price was doing really good, right? So we managed to make new highs. The price broke horizontal resistance, then attacked the midterm dynamic resistance, and they bounced heavily. And here many traders, experts were wondering if that's a head and shoulder formation or a triple top formation. It doesn't really matter. And if they will break this horizontal support, that would deny the buy signal here, and it could be very dangerous. But we can see an upswing here, the price advanced higher. We tested dynamic resistance for the fourth time. We got a bounce, but this bounce is not very strong at the moment. This is not a head and shoulder formation or a symmetric or a rectangle formation, but now it's a rectangle, and rectangle is a trend continuation pattern. Also, we are below horizontal resistance and a dynamic resistance here, and we are creating a sideways trend, and price being in a sideways trend, short-term sideways trend below a resistance, this is a sign for a possible breakout, right? So we can expect a possible breakout here on this instrument, and this breakout will be bullish. As long as we stay above this orange support, the midterm signal is bullish. As long as we stay above the red line, the long-term signal is bullish. If we will break the red line here, that would trigger a sell signal. So far so good. Australian dollar and New Zealand dollar. Also, we can say so far so good. You remember this downtrend line which was broken and now is being defended, as you can see here. You remember this inverse head and shoulder formation with this horizontal neckline. Price is still above the trend line, is still above the neckline, and is creating a triangle formation. As long as we stay above trend line, neckline, and lower line of the triangle, the sentiment is positive. Obviously, the price can break the lower line of the triangle and, for example, go here, and that wouldn't be a bad thing because we still would be above a trend line, and that would be a flag, not a symmetric triangle. Flag is a trend continuation pattern. So that wouldn't be so bad. That would still be alright. So the sentiment here on Australian dollar to New Zealand dollar is positive. Next instrument is British pound to Canadian dollar. You know this instrument. We do have a bullish engulfing here, and finally we do have a upswing, and the price advancing higher and should advance higher for the next few days, weeks. I think that the price will reach this horizontal resistance, which is 670 pips higher. Maybe not the next week, maybe even not next month, because as you can see, the signal was created at the beginning of the year, and we are having April, and we're just 250 pips above the place where the signal was triggered. So it's going slowly. But everything looks good. Everything looks positive. British pound to American dollar cable. As long as we stay above the pink line, the sentiment is definitely positive here. And I would, well, short-term sentiment, because long-term sentiment, as you can see, is a downtrend, is negative. But short-term, mid-term sentiment is positive. Okay, on Australian dollar to Japanese yen, I don't have anything for you. I have something for you on American dollar to Polish zloty, where we got a bounce from this trend line here. This bounce was just a flag. Flag is a trend continuation pattern. Trend is bearish. Head and shoulder formation, breakout of a neckline, breakout of the lower line of the flag. Price tested the lower line of the flag, tested the neckline, and went lower. Now the closest support is here. Breaking this support will trigger a sell signal, which should aim to the trend line again. So this gives you 440 pips trading opportunity here on this exotic instrument. But this time this exotic instrument is giving very interesting trading opportunity. Let's find some new instruments that I would like to analyze with you. American dollar to Australian dollar to American dollar. We're trying to force this to break this resistance, which wasn't very successful. We're having a major resistance here and a major support here. We are also having a bit less important, but still a good one here in the middle. As long as we stay above this horizontal support, the sentiment can be positive, right? Once we will break it, if we will, that will create a sell signal. But so far so good. It looks like traders may be having another occasion for attacking this resistance. Euro to Australian dollar. We like that instrument because it was trading very technically in the last few weeks. What we're having here right now is this support here. We are also having this resistance here, so it's flag wedge. It's not really important. What's that? It's a trend continuation pattern in a bearish trend. That's what's important. We do have a support after the breakout resistance. That can be considered as a false breakout. So maybe I should change the color here. Now we are testing this resistance again. We do have a bounce here, which may be also in addition to this right shoulder of the head and shoulder formation. So actually going short here with a short stop loss, it's not a good trading opportunity, but interesting option in terms of the risk to reward ratio. But I'm not telling you about a trading signal because we cannot give trading signals and we are not doing that. But it just looks like a good opportunity in terms of the risk to reward ratio, right? Because if the price would go down, broke the lower line of the flag formation, that creates a left shoulder head and a right shoulder. We have a sell signal here, but now risk to reward ratio like 100 pips risk and potentially, let's say 200 pips profit for a start and 400 for a long-term target. It looks alright. Next instrument, Euro to British Pound. I will just analyze few major pairs for you that you can see how I approach trading from the very beginning. Because usually I'm showing you ready charts, but you would like to see most probably how to do that by yourself. You have a resistance here. Support, I wouldn't say that there is a horizontal support. So we are inside of this symmetric triangle formation. We had this. This looked like a breakout, but it failed. So we're back again in the symmetric triangle formation, and they try to break the upper line. They failed, so maybe they will try to break the lower line now. Euro to Japanese yen. What we're having here is a sharp bounce. We were having interesting setup here. I even tweeted about that. That could be a false breakout, but the price declined deeper. But we're having a double bottom formation right now. So it also creates a nice trading opportunity because we do have a clear support here. And going long, for example, the short stop loss here has a good potential risk to reward ratio. But you can think about going long here with the stop loss here. But if this support will be broken, that will trigger a definite sell signal. So that's also a place a bit lower, below lows. There's a place for opening pending order. And by pending order, I mean a sell stop. Okay, next one, New Zealand dollar to American dollar. We are having a retracement here, V-shaped retracement, which are usually very strong. Daily chart, so we shouldn't reach this support. It doesn't look like they will want to reach this support. More probable scenario is the price testing the upper line of this flag formation, but no strong signal there. American dollar to Canadian dollar. Unfortunately, it is a sideways trend, nothing interesting for trend followers, for trend traders. I am the trend follower. We are below important horizontal resistance, above important horizontal support. Here is the support. No trading signal here whatsoever. Next major will be American dollar to Swiss franc. So as I said, guys, this week we're having sideways trends almost everywhere. We are just waiting for a breakout. We are waiting for the FOMC to bring the volatility back. On American dollar to Swiss franc, what we're having here is an ascending triangle formation, and we're having a midterm correction here, which is a flag. Okay, like that. Horizontal support here as well, two false breakouts. Most probable scenario is the price touching the upper line of this flag formation, and most possibly a breakout. Last instrument from the forex market. After that I will show you oil. Oh, sorry, not this template. I don't like indicators. I will show you oil and indexes. This is hourly chart on American dollar to Japanese yen. We're having a support here, we're having a resistance here, and again we are in the middle between an important resistance and an important support, and we're just waiting for trading signal to emerge here, because there is none right now. There is absolutely no trading signal here whatsoever. But again, I would like to show you, for example, false breakouts. There's loads of false breakouts everywhere. They are decent trading occasions, and you can please think about using them for a while. Okay, let's see stocks, indexes, and oil. Let's start with WTI. So on WTI, what we're having here was this triangle formation. And now, as you can see, this drop after the data about rise in inventories, and a drop was expected. It happened on a place which was not it wasn't a coincidence. As you can see, it was also in the same time a horizontal resistance here, but traders are pushing higher. They do not care much about that build, about the bigger inventories. I think the biggest story now for oil as a potential speculation of extending the OPEC agreement. That's the fuel for the upswings. S&P 500 on maybe on H4 chart or H4 chart. What we have here is a wedge formation. It depends, because we had also resistance here, so this could be considered as a false breakout. This is FOMC reaction. But again, catching shorts on indexes at the moment seems like a good idea, because we are near all-time highs, and retail traders, they tend to love going against the trend, especially on all-time highs. But at the same time, you have to be fair with yourself and be honest with yourself. And can you really see a sell signals here? Because I don't. What I'm seeing here is a strong uptrend which is paused from time to time with flat corrections, not strong, big, deep corrections which retrace like 38 or 50% of the trend. No, those corrections don't even retrace like 23.6 Fibonacci level, which means that they are very, very limited. And to be honest with you, I don't see a sell opportunity here on S&P 500. For me, the party goes on. That's just a correction, and the price should break the upper line of this index. And I'm telling that with a big pain, because in general, I don't believe in this uptrend which we are seeing on stocks right now. I think it's just the end. We're approaching the end very, very slowly. On DAX, we have a channel up formation. That could be considered as a false breakout of the upper line of the channel up, but in a strong trends, that false breakouts do not work actually very much. You shouldn't just go for a false breakout, but false breakout on a good place is essential. Here, breaking the channel up, upper line of the channel up formation, that's just a sign of enormous strength, not the sign of weakness. So you shouldn't trade much against those. What we're having on DAX was a bearish opening here, and now the price is trying to close the gap, which is always the case. If you see that, it's one of the most important price action principles, that gaps like to be closed, and most of the gaps on the market are closed. So it's it's very common for price action traders to wait for an opening. If they see a gap, they go against the gap. They go towards the gap. They want to close it, right? That's what. So when there's a bearish gap, they are buying. When there is a bullish gap, they are selling. That's what traders do, and why they do that? Because it works. In most of the cases, it just works. Okay, those were instruments I wanted to show you on the market today. So as you can see, trading is a bit boring today, but it just how it is very often. It's like that before FOMC, before non-farm payrolls. Market is usually quiet on Wednesday and Thursday before non-farm payrolls. That's just how it is. That's how the market works. Okay. Thanks guys for watching our daily analytical report. Now a short break, and after that we will have a webinar. for beginners, for traders who just started trading about technical analysis. Thanks very much, guys, and see you tomorrow.